show you guys some settings that I use on my charts. But first I wanted to show you guys the different plans that are going on. I just use the Pro plan. It comes with 5 indicators per chart. You can have 2 charts in one window at a time. Ad free, up to 20 alerts. You can use a volume profile indicator. Similar to using order blocks, I just use order blocks to identify supply and demand. But those are the few main things that you got to decide on what you want. I found that I get by just fine with the Pro plan. So here's a chart. I'm a little laggy right now because I'm already screen recording, but default you'll see this. All the buttons are the same on mobile, but rather than it telling you that this plus sign means compare and this FX sign means indicators, it's only going to show you the symbol. But first, if you click on this little cogwheel, you can open the chart properties. The appearance is right here. I customized my candles. It's black and gray. You can color the background of the chart. So the body of the candle would be the thicker parts rather than the wicks. You can color the wicks here. The last price line is this dotted line that shows you the price, current price. Let's see what else. And the appearance section right here, I believe I chose like a gray and then went in and dimmed it down a bit. And then you can click down here at the template. You can save this, save as. I just saved mine. Saved mine as new, whatever you want to name it. It's up to you. So there's a trick that I learned. Since you're only able to add 5 indicators at one time, I like to have at least the 20 moving average, the 50 moving average, the 100, and the 200 moving average. So there's a way you can bundle all 4 of those in one indicator. So if I click here, type in 4MA, you can select this top one. If you click this star, it'll add it to your favorites. So just click it one time. It'll add it up here. Go up, click the settings, and now you can choose the colors for each moving average. For the inputs, we can go down here. I'm going to change these to 20, 50, 100, and 200. Those 4 moving averages are the go-to moving averages a lot of traders follow. On the daily chart, super important that we're above the 200 moving average. Otherwise, a lot of people tend not to touch a trade unless it's above it. If it's under it, people will wait till it gets back above it. On the daily chart, if we're above the 20, that usually means that we're in a strong trend. For color schemes, I go bottom to top, so I'll make this line a little thicker. I do just red, orange, green. No, red, orange, yellow, green. The rainbow. Thicken up these lines a bit so we can see them better. Probably do full brightness. It's really up to you how you want to customize it. You can do all kinds of different types of lines. I just stick with the regular line. You can save it as a default if you'd like. I tend to just leave the 200 and the 100 moving average open unless I want to see the 50 or 20. I'll just go into settings and activate them real quick. What's another one? So RSI is a really important one. RSI is used to spot bearish and bullish divergences. For example, we made a higher high here. For an RSI, we made a lower high. So that was a signal that we were losing momentum within the trend. And as you can see, we started breaking down a little bit. They say that for a classic bullish divergence, not to get off topic here, but you want both points in the oversold section for it to be a classic. But this one's slightly underneath the oversold, which is the white area above the gray. The white area below the gray is the overbought section. So down in here, you can see we had downward price action right here. But you can see the RSI made higher highs or higher lows, signaling an upwards change in trend. Let's see. So the compare I don't really use too often. If your chart's stuck on lines like this, go up to here, change that to candles. If you right click, you can add alerts. Inside the alerts, you can choose whether it goes off once or every time it crosses your alert, it'll go off. Down here, you can make a note, new low, whatever. And if you download the app on your phone, you actually get the alerts on your phone too. You could have it play a sound. They have a bunch of different sounds you can choose from. You can choose whether or not it just goes off once, if the alarm goes off over 5 seconds, 10 seconds, 30 seconds, or up to a minute long. Sometimes if I'm in like a leveraged trade and I have to go to bed, sometimes I'll leave my computer open and set it to a minute. That way if it goes off, something important's going on, my computer will wake my ass up. You can choose whether price is crossing down through your alert, so it triggers, crossing up. Most of the time I just leave it at crossing. Let's see. So that volume profile indicator. So upgrading to the Pro plan allows you to use this indicator, volume profile. There's also another one I like better. It's called the visible range. If you open up the settings, let's turn this to 200. Get a more defined area. But the largest peaks is areas where the most trading took place. So you can see here around 56.4K. Within this entire range, it's showing that there was a lot of trading happening here, peaks in here and here. So you can use these as support and resistance levels. But I tend to just use order blocks. What else? You go over here into your watch list. You can create different lists. So I have stuff for Bitcoin dominance. This one's CME futures. There's a whole theory that if you see gaps like this gap right here, that these gaps are supposedly supposed to at some time supposed to get filled. Some people believe in it, others don't. I tend to not pay attention, to be honest. DXY. It's the value strength of the dollar chart. You see the dollar's been making a pretty nice run right now. Usually it's correlated with Bitcoin. If the dollar's going up, Bitcoin's usually going down. If dollar's going down, Bitcoin's usually going up. It's just a list I have. I made another one for NFT, metaverse coins, pot stocks, spot cryptos, so non-leveraged coins. I have a bunch of different stocks that I've been following. To create a new list, you can just go up here, create a new list, and now from here you can click this plus symbol, and you can choose your sector, whether it's stocks, futures, crypto. So we want to add Bitcoin. I always tend to try to find the Binance calculated by Trading View chart right here. Bitcoin US dollar calculated by Trading View. So these tend to give you the most history and price. What you see, this one only goes up to 2020. So sometimes different charts have different lengths. Coinbase maybe. Yeah, so the Coinbase Bitcoin chart goes all the way back to 2015. So just try different charts if can't really find a wide amount of price history. This tab, this is where you'll find your alerts. So if we set an alert right here, and also this little plus sign, you can add alerts quickly like that too. So once we add that alert, it'll show up here. I'm gonna click this sign to either remove all, stop all. Trading View has a pretty cool like little community built within it. So if I create a chart setup, I can click publish idea, give it a description, give it my analysis. You can say, oh, is this a long play? Is this a short play? Is this a trend analysis? Is this a chart pattern? Am I talking about technical indicators? Am I talking about Elliott wave theory? And then you can publish your idea, and it'll end up in this idea stream. So these are past ideas that I posted. My last one was September 29th. You can see I got 3 likes, 204 views. Sometimes people will respond and shit like that. A little community within Trading View, which is cool. So really, other than the moving averages and RSI, I don't really use a whole lot of indicators. I utilize order blocks to identify supply and demand levels, and then I use the moving averages to try to find confluence within those levels. So if we go here, so this price range right here, it's on the left. We can go over the tools. So right here on this trend line, you click that and draw trend lines. Change the color of the trend line. So blue. Usually on my charts for resistance trend line, I'll do red. For a support trend line, I'll use blue. And here you can change the wideness of your trend line. You can add alerts to your trend line. You can lock the trend line. Sometimes you might be trying to move something and you accidentally move your trend line. So if you do that, you can actually go to this back button, click back. Whenever I draw something, I'll usually lock it. Another important thing, sharing or no, autosave, turn that off, because what will happen is sometimes you may have multiple tabs open with multiple charts, and as it's autosaving, it'll overwrite one chart to the other chart. You'll open up your chart later and notice everything you just did is gone, and it's because you had another window open that autosaved over it. It's pretty annoying. Just turn autosave off. But when doing that, you got to click this little cloud button to save the chart every time. Otherwise, if you close out, it's not gonna save what you did. Um, so let's see. So out of this area, what I use the most is trend lines and horizontal rays. Horizontal rays, um, in conjunction with like this magnet. I usually just use a weak magnet. It'll clip. It'll automatically snap on to the candles. So I get perfect range of the candle. So it snaps onto the closing price of an opening price here. If you double click on here, you can enable it to show the price or not show the price. Sometimes when you have a lot of lines going on at one time, the prices can get annoying to look at, but it's really up to you. You can do text, so maybe put a daily pivot. These flat parts that reversion trend. So we were going up and then we just tanked right there. So that right here, the flat part of the candle would be the pivot. Put labels on it. Daily pivot. Change the size of the text if you want. You can decide if it's on the bottom, the middle, left, center, or right of the line. This price range. So you can see. So over here you have your long tool, your short position tool. Out of here, what I use the most is the long tool and the price range. I've never used anything other than the long and short position tool with the price range. So here we see a daily demand order block. When you guys see my charts, I'll have my daily demands blue. And that's when I'll take this horizontal ray and I'll go on the bottom right there and I'll label it. Since we're on the daily chart, this is the 1 day chart, I'll label it D1 demand, since that's a demand block. This black block represents 1 day worth of consolidation before price moved up. So it signifies that buyers stepped in this area to push price up. So if price would ever fall down again, chances are likely that that level is going to turn into support. Buyers are going to step in there again. You can see it front ran it a little bit, almost tapped it, but still bounced in that range. Came down, dropped, bounced, and now we're trying to form support here as well again. So this is a good order block that's representing demand that's holding as support. I don't want the red in there, so I'm just going to turn this transparency all the way down. But you can see my label D1 demand stays there. It's pretty handy. This pivot right here, let's look at previous price action. So if we get a horizontal ray and we clip one right here. So look what happened. So we have this pivot right here, right? Broke above it, ranged, lost it, resistance, resistance, finally broke above it, boom, bounce at support, had a nice little run up. So now we have this pivot area. If this demand area is lost, I think this this pivot area should hold the support. Break back above, flip that lost demand back into support if it happens to be lost. Just different little tools you can use. So right now to draw that, I'm using the brush. Computer's lagging a bit. Never really use the highlighter or the rectangle or the circle. I do use the path pretty often, which does the same thing as the paintbrush, just a little cleaner, sharper lines. So you can press escape to stop drawing lines. Text, if you want to do some text. Move it around, whatever you want to do. The arrows, sometimes I'll use the arrows to mark bounce zones. And then I'll also refer to them in my charts when I post in Discord so that you guys understand exactly what spot I'm talking about. I'll mention, it bounced at support at the blue arrow, so that way you guys can easily see what area I'm talking about. And here we get into some Elliott wave theory. It's said that every major cycle is made up of 5 wave moves. I think whenever this wave 4 finishes and we start moving up, to start wave 5, I saw this little channel right here that I think is going to take us to 100K. So see, we have like this resistance area right there. And this tool that I'm using right now is called the parallel channel. So we had some resistance. So here there was resistance with the midline. I think this next wave 5 should move us on upwards to about 100K. Be interesting to see what happens once we get up to that area. So yeah, the parallel channel is cool. If you see some type of channel type structures, you can use that. What else we use? So the magnet, sometimes if you see you're trying to throw a horizontal ray somewhere or whatever, and your cursor keeps spazzing out, it's probably because you're on magnet mode. The measure tool is really good. So it allows you to measure areas. So here I started at the bottom, went up to the top. We can see it tells us that over the span of 94 days, we made 127% move. So I'm always using the measure tool to measure shit. Right here's the trash can button. You can, if you click it, it's going to remove all your drawings. But you can also click the sub menu and have it remove your indicators, or remove both your drawings and indicators. So if I click it, it's going to delete all my drawings. Other indicator some people use, or a lot of people, is volume. I don't really pay attention to volume all that much, to be honest. You can see volume's been relatively flat, but they say that if you're seeing upwards price movement, you want to see volume move up as well. So if volume's not moving up with price, it could be a bearish divergence within the volume. I don't really pay attention to it though, to be honest. What else we got? Oh yeah, another important thing. So you can see as I'm zooming in and out, the chart's kind of staying relatively together as I'm zooming in and out, right? But if you click and drag the price up or down, it's going to take you out of that mode. And you can see as I'm zooming in, you kind of lose the track of the candles. So if you click this cogwheel down at the bottom right corner to reset price scale, it'll put you back in auto fits data to screen mode. If you click on the chart itself and move it around, you can only go left or right. So if you want to be able to move the chart completely freely, you got to drag the price up and down real quick, or up or down. And now I'm free to move this chart however I wish. All right, this gives you a little more control. And zoom up, click the price, drag it up to zoom vertically, and then you can move your fingers in and out. If you're on a phone, you just use 2 fingers to stretch it sideways. Then when you're done, you can always reset price scale so that when you zoom in and out, the candlesticks follow, stay on screen. So let's see. So on my chart, gray is upwards momentum, black is downwards momentum. On your candle, so right here you have the opening price, the closing price. You have your high and your low at the bottoms and tops of the wicks. If you hover over a candle, you can see up here in this area, it shows you the opening price, the high, the low, and the closing price. I'll do some more videos on that another time, but just to go through the overall layout of the Trading View screen, just keep it at that for now. Financials, I've never really touched that tab. Up here, you can look for other coins, but you should really be just adding coins to your watch list and selecting from there. So I have a bunch of shit I'm watching right now. CRV looks ready to fucking explode. Over here, if you go down the drop down menu, you have all these different time frames. You can go to the right and favorite it so it adds it up here. My go-tos are 5-minute. I rarely watch, but the 15-minute I'll go to if I want to watch current price action. Like right now we're on the daily chart. If I want to get a more defined look at what price is doing, I'll go to the 15-minute chart. Sometimes I'll watch that for hours. The forward chart's always a go-to for relative strength, and the daily, the 3-day, weekly, just to get an overall zoom out of price action. Get the overall big picture look on where price is going. Sometimes people get way too caught up on the 5-minute chart and they just see things like this. And it's like, oh my God, price is crashing. Price is crashing. But it's like, zoom out because look, price is actually pumping, you know. So don't get caught up too much in the low time frames. Try to get used to watching the 4-hour chart, the daily chart, 3-day chart. So you can customize your favorite time frames in here. You can even go down to the bottom. Let's say I can type in 5 minutes. I can change that to days, hours, weeks. I'll change the days, click add, and it'll pop up right here. So now we're on the 5-day chart. So each candle represents 5 days. So if I go to the daily chart, each candle represents 1 day. Weekly chart, same thing. Each candle represents 1 week. You got this little full screen mode right here. So that'll put you in full screen. Just click escape to get out of there. There's this cool feature right here, bar replay. You select a time frame. You have the 4-hour chart. If you click play, it'll start playing out what price did up until now, depending on where you selected in the price history. Exit this. Trying to think what else we need to go over. Down here, you can find a list of all your items, all your tools that you put on screen. So horizontal ray. So you can make it invisible. You can see that this one is my week 1 horizontal ray. The line itself is, put the opacity all the way down. I just use it for the labels. It's your object tree. You take snapshots of your chart so you can save it, send it to your homies. You can link your Twitter. Templates. So after you're done building your template the way you want it, you can go in here and save it as a template. I just let it put A1 for mine. I think this used to be an old, super old template that I used to use. I used to use the volume profile indicator before I discovered order blocks. I don't use that anymore. Don't use the 12. Don't really follow volume anymore, and I don't follow the stochastic. Stochastic is it's a momentum indicator, just like the RSI. A lot of these troughs right here, where you see it curling back up at the bottom here, you can see price went up. Price started curving down here as the stock got up here and started curving down. On lower time frames, it could be a cool little indicator to use, but I've learned that you can't always count on it. You just play shit level by level. Buy demand, sell supply. You see CRV here on the weekly chart. You can see this gray block right here was a week worth of consolidation before price took a fat shit. So the weekly, the higher the time frame, the higher the stronger the zone. So I used my price range tool with the magnet to highlight it. I use red for supply. So you can see here how much resistance there was within this supply zone. It's rejection, 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 rejection. Boom, finally made a move up, came down, flipped it to support, and now we're starting to make our move up. And that's really what you want to be looking for is high time frame support and resistance flips. So flipping resistance, flipping supply zones into support, that's when you know that bullish momentum's on the way. The same way as if, a demand zone is lost, then turns resistance. So you have this demand block right here, this black block. We're on the weekly chart, so that represents 1 week of consolidation before price got pushed up. You see it got rejected at supply, bounced here at demand, rejected at supply again, ended up losing that demand zone. That supply was still resistance. It tried to cut above the demand zone, but ended up losing it again. You can see the demand zone turned into resistance. Finally broke back above it, flipped it into support, tried to make a move up through the supply zone again, rejected, came back down, formed nice support on this demand. Eventually, finally broke out of that supply zone. Let's see, let's go to the 3-day chart, see if maybe the daily. It's really just scanning the charts, looking for these different levels. So if I throw a horizontal ray here, so that's resistance. Make this solid real quick. So now if we go over here, look at that. So if we had marked this out prior, if I go in here, go to text, D1 supply, or D1 pivot, you can see as we finally broke above, pumped straight through that supply zone, we hit this pivot area, rejected, boom, flipped that supply into support, and now we're trying to make our way past it again. Once we get above this D1 pivot on CRV at around $5.36, get a daily close above that, this thing's gonna fucking fly. This is exactly what you want to look for, is, like I said, these high time frames, supply and resistance flips, supply and demand flips. So if we go to sushi, so right here I can already see this demand block. You see price was bounce as support, 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 support. Now we're sitting at that same support level. Trying to find the order block I selected in this red. This isn't my original chart. Let me go back to my other chart that I've already mapped out sushi on. My computer is acting slow as fuck. So I have it mapped out here that was a 2-day supply area. So if we go to the 2-day chart, so you can see I mapped that out. Put my labels on 3-day. So right here, so there's a 3-day order block, 3 days of consolidation before price got pushed up. You see we have another one here, form support. So this one right here, D3 demand, price came down, bounce, bounce, bounce. At this day 3 order block, you can see it was support, support, ended up losing it, reclaimed it, rejected that supply, price crashed, bounced. Now this demand zone, previous support turned into resistance, rejected once again, found support, still resistance, resistance, came down, bounced, Didn't quite make it all the way up, rejected. Now we're back at it again. These zones right here are labeled as 2-day order blocks. So you can see here, this gray block before price went down, so that represents supply. That means that this was 2 days worth of consolidation before sellers sold and pushed price down. You can see this green zone should be red. I just labeled it green. If you guys ever see a green zone on my charts, that just means that that's the most important level to keep your eye on. I'm gonna get rid of these moving averages real quick. But you can see this block right here is gray. It's pretty skinny. I usually just highlight the bodies of the candle. Unless we get super small body, I'll highlight some of the wick. But you can see it's gray. So that, like I said, it represents 2 days of consolidation before sellers sold and pushed price down. I'll make another video on market structure, but what you want to see is breaks in market structure before getting too excited. Here's another gray block before price went down, representing supply. Breaks in market structure signal trend reversals. So you can see right now price is just constantly getting pushed down. So we could pop up here, reject, right? And maybe potentially even make a new low. You never know. I mean, I think the low is pretty damn close to being in. Bitcoin's still in some murky waters, but I think the bottom should be fairly close to being in. But they say that if we use a Fibonacci to draw a range, and the range is just gonna split up our area into 4 separate parts. You can see my label so left. But you can see the 0, the 236, the 0.5, the 0.78, and the 1. All this is doing is just splitting up this top to this bottom in 4 separate sections, right? So it's super important whenever you build this range right here, you need to reclaim the mid range to have a bullish break in market structure. And you can see that this supply block that I labeled green lines up with our 0.5 midline of this range. So once we reclaim the midline of the range, that's a bullish indicator that price is about to start reversing and heading back up to the upside. Until that midline is reclaimed, you're not out of the woods just yet. So if I was in sushi, you could be playing it up to here potentially, completely selling right there, and then even just waiting until you can play it up to this level right here. It might reject and bounce off this prior supply, turning that supply into support. You could enter it again, play it back up to here, fully exit. If it happens to break above it, chances are it's going to reject here at this supply, come down to retest the midline. Now you can get into a position where you plan to hold long term. Until then, price still downwards price action is still on the table in my opinion. See, I'm using this Fibonacci retracement tool as a range. I believe I made a video on the Cryptardz YouTube channel. I applied the defaults to this. This is what a Fibonacci retracement actually looks like. The real way you want to be using these is measuring the bottom of a cycle to the top of a cycle. So if we start here, oops, if we start here, and we go up to the top right here, I'm just going to stretch it out though. When using the Fibonacci retracement tool, the most important areas to look for is the 0.5 and the 0.618. What that's representing is a 50% correction within that cycle. I customized mine. You can go into the settings. You can decide like, I don't want to see the 382. I don't want to see the 2618, the 423, any of this shit. I'm mostly concerned about the 0.618 and the 0.5. And within these ranges, you can just customize it, right? So, and then you can save that, save it. I saved that as a fib. So whenever price reaches the 618, they call that the golden pocket. That's like always a buy the dip zone right there. Anywhere in between the 0.5 and the 0.618, you should start accumulating. Anything below it, that's when you're going to start using demand order blocks to identify a high time frame demand. And you can start adding more onto your bags in here. If let's say you enter in here and you're planning to hold this longer term, I would try to add even more on in here. So you add it on here, you want to be adding less on as price goes higher. If you start adding more and more on as price goes higher, you're just going to move your average entry up to the upside. You want to add the majority of your bag down low, and then start adding less and less. Let's say, for example, you put in 1,000 right in here. So let's say, for an example, let's say price were to clear this supply, flip it into support right here. If you were to add 1,000 here, you could probably add 200 more bucks here. That way, it's keeping your average entry somewhere like right in here. If you added 1,000 here and 1,000 here, well, now your average entry is in the middle. You want to be adding less on dips to keep your average entry lower. So if you put 1,000 here, price dip down to here, shit, maybe you want to add another 1,000, 2,000. That way you average your price even lower. That's the whole name of the game, is getting your price as low as possible and holding it till the fireworks pop off. Getting a little off topic, but I can give more detailed explanations of how to layer bids and shit in another video. You guys check out the trading tips and tricks thread. I made a little like infographic about how to properly layer bids and shit like that. Because with all of this, you do want to be using stop losses and stuff. If you're planning on holding this stuff long term, I guess you don't really have to worry about a stop loss that much. But if you're trying to manage your risk properly and get in a trade and get out of a trade, you're definitely going to want to take risk management in mind, proper position sizing. I did make a video on this. It should be the latest post in the Tips and Tricks channel. What else? EMA 200 I rarely look at. Volume I rarely look at. Trend-based fib extension. So this is measuring the bottom of a cycle to the top of a cycle, and then measuring the bottom of the correction. It kind of gives you a guesstimation on where the next trend is going. A lot of traders, they'll aim for the 1.618 fib extension. So if you guys are in sushi and you plan on holding this for a long time, I'd be holding that shit to about 43 bucks. Maybe 29. Definitely be taking some profits. I would definitely be taking some profits here at this D3 supply right here. Maybe take like a third off the table. If price dips back down into this D3 demand, you can add it back plus the profits. Plus, you can add your original purchase plus the profits there, compounding. Ride it up to the 1, take another third off the table here. Chances are the price will most likely reject, maybe retest this previous high here. You can add back your original buy plus the profits you had just taken off, compounding again. Ride it up to the 43 bucks. I'd probably be aiming to exit my full position there.